All right, why don't we begin? A very good day to you all. Welcome. The Wall Street Blockchain Alliance is proud to offer this special webinar on crypto market structure, tokenization, and the future of global financial markets. In this important session, experts from our members and partners at Lukka, Securitize, and S&P Dow Jones Indices will discuss crypto market structure, why pricing is essential, how we expect traditional market structures to evolve, and much, much more. Before we begin, a bit of housekeeping for today's session. This webinar is being recorded. All attendees will be in listen-only mode. Attendees, you're all encouraged to submit questions for each of the sessions and each of our panelists using the Zoom chat function, and we will certainly reserve time at the end of the event for audience Q&A. Please keep in mind that this event is offered for general information and educational purposes only and is not intended to constitute investment, legal, tax, or accounting advice. Thank you, lawyers. Any views or opinions expressed during this event are those of the participants and do not necessarily reflect the views of the Wall Street Blockchain Alliance or our participants' firms. So with all of that housekeeping out of the way, I want to kick off and do some introductions. We've got a great panel and great session. We make these very conversational. So why don't I start saying hello? Sharon, let's start with you. Tell us who you are, what you do. You and I go back a little bit, and thank you for joining us.
Yeah, happy to be here, Ron. Hello, everybody. I'm Sharon Leibowitz. I'm the head of innovation at S&P Dow Jones Indices. I'm responsible for new products and new business models that are transformative to our business. Today, the bulk of that innovation is around digital assets and blockchain, and that's what we're here to discuss today. The team works with both of these firms, with Lukka as our cryptocurrency provider and also Securitize as a licensee of our crypto indices.
Excellent, Sharon. Thanks so much. Thank you for being here. Next up, and we've got a lovely slide here, Mr. Dan. Please say hello. Tell us what you do.
Yeah. Hi, everybody. Hey, Ron. Thanks for having us today. Hello, everyone. My name is Dan Husher. I'm the Chief Data Officer at Lukka. Joined the organization approximately 18 months ago. Prior to joining Lukka, I spent 16 years at a company called IHS Markit, which is obviously now part of Sharon's organization and S&P Global. So I come from a data background, spent really my entire career in data, quite frankly, credit more specifically, but was brought on to build out the data and analytics business here for Lukka. And then prior to joining Markit back in 2005, I spent several years in the United States Army as an armored crewman. Lukka as a company, you could think of Lukka as, I guess if you were to sum up Lukka in really kind of one sentence, what we do is essentially help businesses bridge that gap between the complexities of the blockchain and more traditional business needs. So we service some of the most risk mature businesses in the world, and we provide customers with data and software products. So we pride ourselves on being institutional grade, and all of our products are built with AICP SOC controls for accuracy and completeness. We are a global company headquartered in Florida, but we do have offices around the globe, and we were originally founded in 2014. So quite mature for a crypto company.
Dan, thanks so much. It's great to have you. Luke has been a member of the Wall Street Blockchain Alliance for a long time, so it's a privilege to have you guys at the table again as well. I know we could talk about this later. I don't know if you want to dive into this real quickly as we set up, Dan. Let me know how you want to approach this, because we've got a lot of data and a lot of products here from the Lukka side.
Yeah, sure. So, I mean, this is an overview of some of the data products, and I think we'll get into some of this stuff as we kind of articulate, the role that data plays. But again, we're creating standards and kind of normalization of data that doesn't necessarily exist in in a decentralized world, where our customers can essentially focus more on their business and growing their business rather than the back-end data logistics. So broadly speaking, we have two sleeves of data offerings, those that fit within our reference data products, and then those that fit within our pricing or market data products.
Dan, thanks so much. And I know we're going to touch on a bunch of these as we proceed with the webinar and the conversation. Mr. Hogan, Securitize Capital, great to have you. Tell us who you are, what you're doing, and then we'll kick it off.
Oh, thanks again, Ron. Super happy to be here, and very happy to be here, of course, with Sharon and Dan. My name is David Hogan. I head of sales and distribution here at Securitize Capital. I can give you a little background. My background is really mostly banking, some form of derivatives and alternative assets. I did that for about 25 plus years. I joined the firm here in the beginning of January, so I'm somewhat new to the space, but I think my role in sales and distribution is really kind of to bridge the crypto blockchain world and the traditional finance world. Very excited and really having a great time at this firm. Give you a little color about Securitize, just to give a little background. Our parent company is Securitize Inc. Again, the firm was founded in 2017. Our founders, Carlos Domingo and Jamie Finn, put the firm together, and the whole goal was to have an end-to-end platform that can, in a regulatory compliant way, tokenize securities. And they've done that in a very deliberate way as well, in the sense that first thing we needed a transfer agent. So we needed to get a transfer agent up and running. We did that. We needed to get a broker dealer and an ATS to be able to issue the tokens that we're going to be doing. We also need an entity to do KYC and AML on the blockchain. So we needed all those components to do tokenization of securities properly. And then the last part that they brought in at the end of last year, the firm set up an asset management division, one, to be able to populate some product onto the platform. And that's what Securitize Capital does. We're the asset manager of some of the products that we have on our platform. And again, that's what we're here to talk about today.
David, thanks so much. Really appreciate it. And again, we'll make some of this information available. You guys have been in the news. Do you want to hit on the KKR Healthcare Fund real quickly, David, while we're here?
Yeah, again, we've certainly, we've been thrilled to work on the S&P cryptocurrency fund, absolutely. But of course, you've probably seen us in the news as of late, where we did come out, it's about 6 or 7 weeks ago, where we're working with KKR. Again, as you can imagine, very happy to be working with a top quality firm like that. I guess what we did there, and we'll certainly hopefully be doing more of as we build up a pipeline, is what we did is we took a vertical slice of a private equity fund and we tokenized it. Again, that's really the big theme about that is certainly it's providing access. It's providing access in 2 ways. It's providing managers broader access to a broader set of potential investors, and it's providing access on the other side for those types of investors to a broader set of investments. Again, we're very excited about working with KKR on the fund. We're going to be doing hopefully more and more of those types of structures through the year.
David, thanks so much. Sharon, I wanted to start with you if we could, and we approach these conversationally with a kind of level setting kickoff question. You and I have been having the conversation about kind of market structure in the crypto and TradFi world for a long time. Tell us a little bit about how S&P Dow Jones Indices has approached this. I remember an early conversation you and I had around pricing, and that we always believed that crypto enthusiasts back in the day kind of underestimated the challenges of pricing. Can you build this out a little bit? Tell us about the index. Tell us about what S&P has been doing in this space.
Yeah. So let's start with market structure a bit. I think because crypto is really unique, as probably this whole audience knows, right? Traditional markets have really clear roles and responsibilities, right? Within traditional market structure, right? We see central intermediaries, we've got exchanges, we've got broker dealers, we've got market makers, right? But by contrast, right, the crypto ecosystem has hundreds of exchanges and OTC desks, right? As well as peer-to-peer exchanges, between users and on decentralized exchanges. So because there are so many, this decentralized market, right, and there's so many exchanges, it makes it the pricing and really critical. It must be transparent, right? And I think the conversation hasn't changed that much, right, since you and I had it back when, right? There's no concept of a single price. There's no concept of a market close. So it's really important to have that consistent pricing, right? And I think the way we see it as, and I'm sure we'll talk about why we chose Lukka as our crypto price provider, or Lukka can elaborate. That is, Dan can elaborate more. But I think when we talk about where the market's going, we know that the regulations, sort of are evolving. And we're starting to see more lean towards, let's say, FASB having a sort of a leaning towards fair market value, which I think is really interesting. But having, for us, having that defined pricing methodology, a way to sort of bring that clarity to markets was really important, to help with compliance, to help with, avoiding market manipulation and those types of things.
Sharon, thanks so much. And Dan, we'll definitely come to you in a moment. We certainly have some questions there. But before I get off the slide here, Sharon, can you peel back the layers on the futures as well? Is that being driven by client demand? What built out the next step where you took it from spot prices to building out the futures indices? And what is that looking like?
Yeah. So, I mean, again, it's all about bringing transparency and accessibility to the asset class, right? And I think the reason primarily that we went into futures is because of a lack of regulations or lack of clarity around regulations in the future. I'm sure, this is a primarily US audience, and we know that, the ability to have, for instance, a spot Bitcoin ETF has been elusive for several years now, right? So I think when we are working with more established institutions, their goal is to develop a product that they can hold, right? If it's going to be treated as a security, or if it's going to be an ETF, it has to pass all the, the regs and stuff. And in the US, that means it needs to be futures based. So that's primarily the reason, right? I mean, it works both ways. We're offering what the market wants, but we're also offering what's allowed currently.
Excellent. Sharon, thank you so much. I'm going to stop the share. Let's dive into the conversation if we could. And Dan, I want to pull you into this a little bit. And I remember the early Lukka days, and one of the conversations we had, I'd love you to peel back the layers on this. Sharon referenced the importance of pricing data and the multitude of exchanges. And this is, I think, very complicated. I'd love you to pull back the layers of this a little bit. We're not just talking about the fact that there's a lot of different exchanges globally. It's different formats, it's different timings, it's different methodologies for calculating value. And I know Luke has done a lot of work on preparing a very deep data set of pricing data going back many, many years. But tell us what those challenges were, and what did Lukka build out to kind of address this from an institutional markets perspective?
Yeah, it's definitely, there's definitely multiple layers of the onion that you can peel back. And as you get deeper down the rabbit hole, you start to uncover additional rabbit holes. So the rabbit holes have rabbit holes in some scenarios. Certainly coming from a traditional finance background and traditional financial markets data background, you definitely have taken some things for granted that may not participate, actually exist, for instance, in crypto. And the markets are evolving and the exchanges are becoming better and better, and data reliability and so on and so forth over time. And we'll eventually get there as an industry. But for the past 7 years, Lukka has just been doing this, is collecting asset data from across the ecosystem, providing institutional quality data products for its customers. And when it comes to a pricing perspective, like as Sharon pointed out, decentralization offers a lot of benefits. Nobody would contest that. But one of those is not standardization. That's not something that it brings. It works the other way, right? So, as Sharon pointed out, there's literally hundreds of exchanges. They're not all created equal. They have a variety of different kind of quality, components to them. So they have to be vetted before use. And even simple things like asset identification, right? Is exchanges won't agree on timestamp formats. They won't agree on the tickers. We've seen instances where they'll recycle tickers. They'll change tickers. Sometimes they'll tell you, sometimes they won't tell you, right? So there's this whole kind of what I would refer to as, maybe for lack of a better term, of a little bit of a messy ecosystem, right? And that's where Lukka really comes in, is we take that, we normalize it, we vet it, so our customers can then have a clean, reliable data set to use. So an example of this is with pricing is fair market value. It's like, so what does that look like in crypto, right? If you want to know the closing price of Apple, you can go to the stock exchange at 4 p.m. and everyone would agree that, that's the price of the equity. But, what does that look like in a world where there's hundreds of exchanges in a market that never closes, right? So what does that look like? And Lukka has a product called Lukka Prime. It's meant to measure the fair market value for crypto assets. And it just does that. It looks at qualitative and quantitative measures about an exchange, and the algorithm is codified and runs programmatically. So at any point in time, we're monitoring the marketplace. We're looking for what accounting would require you to select the principal market, okay? And then use an actual transaction from that market. And that's what we're doing. But upstream from there, you need to make sure that you have clean, normalized reference data and market data. And we have a team dedicated to ensuring that all of the assets are mapped properly, even when they don't necessarily agree on taxonomy or tickers. that they're also properly processed for something that we call crypto actions, which is traditionally known as corporate actions in traditional finance.
Dan, thanks. David, weigh in here. We all have backgrounds in financial markets and financial services very broadly. The interesting thing about the crypto markets, there's no Reg NMS, there's no best execution requirement. What do you see in this space, particularly when Securitized Capital looks at what are the things that will be tokenized in the future? It might be worth talking a little bit about what that roadmap looks like in the future.
Well, big picture, I would always say, well, everything. I always put my hand up and say that's certainly my belief is that all securities will eventually be on the blockchain. So I think what's really it's more about the initial need has been about access and using fractionalization and access. I think are two of the big points, but really providing an efficient vehicle, and that's what the tokenization is providing an efficient vehicle for people to access, whether it's, and again, it's nice to break this up, whether it's digital assets, and that's what tokenization, whether you're tokenizing, using tokenization to provide access to digital assets, as we do in our S&P crypto fund, that's a great efficient way for people to get access to a broad set of cryptocurrencies. And again, but in the other way, tokenization being used is certainly for traditional assets, whether it's private equity funds that we're doing with KKR or any other type of fund. Again, so I really think, you're just going to see more and more. Certainly it's been starting with getting, providing access maybe to a liquid asset, certainly. And that's really where, it's gotten off, it's gotten really on the road properly, that people can finally have access to things that maybe heretofore they did not have access to.
David, let's stay with you for a moment. I want to open it up to the rest of our panel. When we're talking about tokenization, I think one of the confusions we still see in the space from, I'll call them financial markets participants who aren't deeply involved in the crypto world. When we talk about tokenization of physical assets, tokenization of digital assets, for example, can you start that conversation? What's your take on that evolution of tokenization? I had a colleague reach out to me the other day and said, well, Ron, you're not going to be tokenizing your house anytime soon. And my answer was, maybe. What does that roadmap of tokenization look like? And where is Securitized Capital potentially, playing in that space?
It's interesting. You can talk about the houses side of it. Again, I think that it is good to step back and remember when we talk about tokens, just to break down, you've got cryptocurrency tokens, right? Yep. Obviously, those are just cryptocurrency tokens are really just the incentive structure to make the blockchains work. I think, just to take a step back. Sure. And then you've got security tokens, which is really, is a record of ownership, right, of public or private securities on the blockchain using smart contracts. So again, I think sometimes, people who are a little bit new to the space, trying to get an idea what's a token, whether, Bitcoin is a cryptocurrency token or Ethereum is a cryptocurrency token. But the tokenization of a lot of what's getting done in the tokenization world is tokenization of traditional assets, traditional financial assets. So what I think what's going to happen is that our job, I think what we're trying to do at Securitize is to bring more and better product onto the platform, because I think that's going to bring more and better investors onto the platform. Certainly, certainly, as I mentioned earlier, it's about access, and it's getting access to, say, private equity alternative assets, right? That may be non-institutional qualified purchasers, accredited investors, maybe did not have access to, and that's certainly a big part of it. So we're going to continue to grow that, because that's certainly where some of the demand is again providing broader access to alternative assets. So that's where a lot of our focus is. But also our focus is really, again, finding ways to tokenize, again, because that's really what I think the next generation of people are looking for. And that's what we're trying to be attuned to, is that as you're seeing this generational wealth transfer, again, it's being transferred down to a more tech savvy generation. And they want to have their assets in tokenized form, right? A lot of them have wallets. If you look at this, a lot of them own Bitcoin and cryptocurrencies already in wallets. And I think eventually they're going to want to have more of their assets, whatever they are, in tokenized form.
I want to rip up the script here a little bit and throw this out for the entirety of the group. Are we talking about the broad democratization of access to different types of markets, and what will that look like in the future? And the reason I say that is, and Sharon, would love to start with you if we could. the requirements to be able to engage in some of these markets, we've all thrown around the words accredited investors, for example, or HNWs, and on and on and on. How does blockchain and the work that S&P is doing with Securitize and Lukka change that access? What is that going to look like in the future? Sharon, do you want to kick that off a little bit?
Sure, I'm happy to kick it off. Yeah, I mean, I think tokenization, it's true. I mean, even if you step back just beyond tokenization, right? Even the whole concept of digital assets and DeFi, it is all about access, right? It's all about people broadening access to new demographics, new markets, right? Well beyond what we have in the US, right? You no longer need a broker dealer to start acquiring assets, right, to accumulating capital, let's say. And so when we think about what tokenization is, the technical aspects, they get complicated, right? What type of token is it? Is it interoperable? Where can it trade? By the laws, right? I mean, but I agree with what David said. It's just like a new wrapper for the 21st century. But I think it's that sort of hyper fractionalization of the token that really creates that access, because people can then access smaller bits, right? You don't need to have whatever that is, $500,000 to build buy an entire house. You can have, a tiny fraction of, well, maybe it's not your house on the market, Ron, but somebody else's.
You'll have to talk to my wife, Sharon.
Okay, I'll call her tomorrow. You can sort of give somebody the ability to have that fractionalization, but it is true. I mean, I think to go back to one part of your question, it was like, so what are the regulations around holding these securities? And, I think they are evolving for sure, but a lot of them have been about, either, right, they need to be accredited investors because we want, if it's a security token, right, by definition, or it needs to be sort of trading on like an ATS and have a duplicate sets of books and records, right? So just that it's blockchain based isn't enough. The SEC wants, FINRA wants everything to have those duplicate books and records. I think we're going to see that continually evolve. I think, but right now, unless we're talking about a product that's entirely DeFi and trading in that space that's unregulated, access isn't there right yet for the typical average investor.
Sharon, thanks. I want to expand upon this theme a little bit as well. And Dan, I'd like to pull you into this conversation, given the work Lukka's had to do to pull together the data over the many years. And Sharon, to that point, the fractionalization and democratization of markets is critically important. I think what's often underestimated is what we call the friction in the marketplace, both for institutional and retail participants. As crypto builds out, as the ability to tokenize different things builds out, Dan, I'm going to ask you what might be a tougher question than I mean it to be. Is Lukka's work going to get harder over time when there are more data points, more securities, less friction, more liquidity, and more velocity? What does that future look like in a world where Sharon and David and I can participate in tokenized assets that didn't exist before?
Yeah, I think in short, the answer is yes, absolutely. I mean, the level of technological innovation and how quickly this ecosystem, invents, reinvents, and innovates is quite impressive. I've never experienced anything professionally at this level of velocity. And one of the biggest issues that I think the companies like Lukka and our peers have is, how do we continue to keep pace with the rapid innovation and new data points that you can collect? So, I think absolutely yes. And kind of coming back to some of the earlier question is, there's already tokenization of real estate, right? And just and we see that today in fractional real estate shares. But how does the market not evolve to something like that? And I think just the underlying value of the blockchain, its technologies, and what it offers the marketplace. For me, I struggle to envision a world in the future where, finance isn't, operating, in a much different fashion. I mean, just instantaneous security settlement. And I struggle to see a world where traditional assets aren't tokenized. How far off in the future that is, I think that's, remain to be seen. But, instantaneous settlement and things I just think, children are our children and people operating in finance and, call it 10 or 20 years, it'll be just vastly different than what we're used to today.
I think thanks, Dan. I think, instantaneous real-time settlement. David, let me pull you into this conversation. I think for a lot of, pardon me, folks that don't understand financial markets, don't understand what a big deal instantaneous real-time settlement is, not just from the perspective of ownership transfer, which is critically important, but also from the unlocking of capital, the unlocking of collateral, for example, the minimization of counterparty risk. David, you go back in the financial markets a while. What is your perspective on, is that an opportunity? Is that a risk? What does that look like in a future? And what is Securitize Capital focusing on?
I mean, I think, certainly taking out some of the intermediaries, right, by definition, is going to take out some of that risk. So that's certainly, and to the extent you can take out, whether it's the fat finger or just the paperwork or an individual doing something, or even if you look at some of the DeFi structures out there, and from a lending standpoint, again, if you think of some of the lending, fiascos that have taken place in the space. And again, if it's set up where it's been coded as to what's going to happen, rather than it's set up where you lean over to Bob and say, should we do a margin call or not? And and that's a qualitative decision. You can see there's going to be problems. So again, if you can start to eliminate some of those intermediaries and some of those steps involved, and again, and I think tokenization and real-time execution can do that. Absolutely.
Just to add to that, if I can, I think David's right. Is it addresses a lot of some of the risks, but there's new risks induced, and this comes to maybe some of the stuff that Sharon was talking about around democratization and access to markets. Is when you move into that self-custody type of realm, and you can trade peer to peer with really anybody. If you make a mistake, there's no help desk to call. Right. And you mentioned
there's no do-overs.
Right. Exactly. Right. So there's, risk will always be present. It's just, what form will it take? Right. So I think some risks are reduced, but, there's new risks that people need to think about. So the people listening in is, I think as you're looking and doing your due diligence and maybe potentially looking to, enter the asset class and get exposure to crypto, just there's going to be new risks you'll need to think about. And there's people like, the people on this call today that have deep experience in their firms in the marketplace, and use this as a resource. We can certainly help you think through those.
I would just add one point. Again, it's education. And one of the, before this webinar, I wrote down a big word. It's just education. I think it's just so important it's certainly incumbent on the various players in the space. But again, Dan, is to what you're referring is there are certainly more risks, but people really have to get up the curve on it. And again, I think education, just like any new product, new invention, is very, very necessary. And
we're 100% right. 100%
Dan, David, thank you so much. Sharon, I'd like to pull you into this portion of it as well. And Dan, you mentioned self-custody. I think every one of us on this panel understands self-custody. Where are we in the understanding level? David, you mentioned education. We all know folks where if you said self-custody, they get it. There's a whole bunch of other people who have no idea what we're talking about. Sharon, from S&P's perspective, the work you've been doing has been very innovative for many, many years. But what is self-custody? And what's that education level at the institutional market space?
Yeah, it's interesting. I mean, right. If you talk institutions, I think there's definitely a higher level of understanding, right? I mean, even if we just take it a step back and take it to the retail level, and we talked about, self-custody or not, right? A lot of retail market participants may not even understand, don't even consider the concept of custody important, because they take it for granted, right? I mean, it's just sort of assumed it's table stakes, right? I have my account at whatever, XYZ, and my money's there and it's custodied and somebody, moves it around for me, right? So I think all of a sudden enter digital assets, right? And it's an entirely different set of questions, and all the things that, we believed in traditional markets are turned on its head. In terms of custody, it's still a pretty challenging topic, and I think it's challenging for institutions, larger institutions, to custody crypto, right? I mean, you're dealing with a whole set of risks that are known, right? I mean, there's technology risks, right? There's counterparty risk, there's the exposure to hacks and whatnot. So I think that when we think about custody, definitely we see a lot of people working with sort of partners, like traditional TradFi people working with partners in the digital native space to do that. And I think also, in terms of some of the indices that we've launched a few that have custodian screens in it, because we want to provide certain, those are our top 5 and top 10 coins indices, because we wanted firms to be able to say, okay, you know what, if I decide to create an asset based on these indices, I will know that there's at least 2, and I'm using this in quotes, qualified custodians, right? There's no list of qualified custodians, right? I mean, we don't have a list of, there's no Boney of the world, right? Yet. So we don't know who those are, but at least, knowing that there's some custodians who have the proper privacy controls, the proper, ISO controls, the proper technology controls in place, that makes a difference.
Sharon, thanks so much. Dan, David, anything you want to add to that? And I do want to hit on the custodian kind of screens real quickly, because I think that's important. But Dan, David, anything you want to add from how aware is the global marketplace of the importance of self-custody, for example?
Yeah, I could take a little bit, and more from a retail perspective.
Yep.
You could, obviously have your own wallets and manage your own keys and take care of all of that. You could certainly do it on the institutional side as well, but there are kind of the more traditional fund admins and custodians coming into the space that can offer services, right, in that regard for customers. So there are options, and we talk about self-custody. We raised it because it presents risks that aren't really present in traditional finances, as people may know it today, and we did want to highlight that. But there are services out there, so if it presents a significant risk and they want that managed by a well-known custodian, they're starting to enter the space.
And to that point, Dan, and Sharon, to the point you made earlier, this is public knowledge. BNY Mellon, we're privileged to have them as a member of the Wall Street Blockchain Alliance. They recently announced their institutional custody level capabilities. So I think the 4 of us are really seeing that evolution of and professionalization of the class. I appreciate all of those comments. And again, for all of our attendees, please answer your questions in the Q&A. Happy to address them with our panelists at the end. I want to pivot a little bit with all of us here. And I feel like we're dancing around it a little bit. And I don't necessarily mean that in a bad way, but kind of regulation's been in the back of my mind with almost every comment that we've made here. And I heard from a very smart person once quite a while ago that the pace of innovation will never be as slow as it is today. And that's certainly true in the crypto space. Do we have concerns that regulators, and we can go down this rabbit hole pretty deeply, that they're not able to keep up with the pace of innovation? And as organizations and how you approach evolution in the crypto space and approach your clients, what are your thoughts on where regulation needs to be? And by the way, that's another rip up the script, because I don't think we added that to the agenda originally.
Yeah, that's fine. I'm happy to take the first cut. And yeah, I just think by its very nature, like, what are you going to regulate, right? So like, first you actually have to have the market evolve, and something needs to come first before you have to determine how you're going to regulate it. So yeah, I do think just by its very nature that regulation will always follow innovation. I don't necessarily think that's a bad thing. I just think that's kind of the natural flow of events. But I don't think there's, at least for my interactions with our customers and potential customers and partners, is there's not an immediate negative knee-jerk reaction, right, to regulation. I don't think it's viewed as negative. I think it's very, very welcomed by the market participants. Some additional clarity from regulation, I think, will go a long way in pushing the asset class forward. Sharon mentioned earlier about kind of the spot ETF being elusive for us, right? And it's inevitable it will come, right? When, we don't know, but we hope soon. But again, it just the ability for regulators to keep up with markets and yeah, I mean, they're going to have to continue to increase their velocity to regulate, just like, innovation is happening. Back to your first comment, it's always going to be innovating at a faster pace than it was yesterday.
And I'm with you, Dan. I'm gonna push back on that a little bit. Just given the public comments from some regulators who clearly say, of course, there's regulation by enforcement because we've got regulation and they're clear and you should follow them. Everything's a security. Said some nameless regulators. I'm just going to open that up. David, Sharon, weigh in there as well, because again, we all of us use that kind of lack of clarity comment, and something that really bit a couple of weeks ago was one of the regulators noting, well, just because you don't like the rules doesn't mean they're not clear. David, what are your thoughts on that? Again, given the market participants you deal with and where you see this roadmap going, and Sharon, S&P has been dealing with regulators and been in that market for a long time. But David, let's start with you. Any thoughts about that?
Well, and I think, yeah, of course, the word clarity does come to mind, and I'll still fight for it. I think of my early days of interest rate derivatives in the 1980s. Yeah, I can certainly show my age. But what the market wanted then was, again, more clarity. Again, and that's because without it, you can't go forward. Again, it's the market participants. We think about, people use the word institutional adoption. People, the institutions, they need that clarity. And again, whether there are current rules, and if people are saying they're not clear, all right, then they're not to them. I think people just do want more of that guidance. I think there's a huge interest. I certainly, you see what the regulators are doing. They're very involved, and it seemed to be having a lot of good conversations with the market participants. So that's great. But in short, I think it's really, again, it's more about just keeping the good dialogue going. But again, without more clarity, things will be hindered and progress will be hindered. And, you certainly want to keep as much of that business going forward as possible.
Sharon, you want to weigh in?
Yeah, sure. I mean, I guess I feel of multi-minds versus the regulators, right? And I'm still chuckling, Ron, because you said you rip up the script. You rip up the script all the time. But anyways, I guess there's a few things. I heard somebody a few weeks ago talk about, regulation sort of should be focused on the use case, not the asset class, right? And I think in a way that makes a lot of sense, right? Because if we think about the way the market will evolve and the way we hope that digital assets and tokenized assets all become part of the mainstream, it's important to think about what things are happening, right? Not just that it's related to crypto or digital assets, but what's happening overall, right? For instance, I mean, we do see a lot of, I'll call it bad behavior, right, happening, in the crypto space. I mean, just as an example, right? I mean, there are no rules against front running, right, in crypto. So, right, you see a lot of, the miners creating blocks, taking MEV, extracting, sort of playing games that way, right? And those of us from traditional finance were like, hey, that's front running, right? And yet we're not calling it that. So, I feel like there's something about legislating the use case. That being said, right now, if you think about like certain types of the markets, they're so difficult for people to access still, right? Even if people say, okay, well, you want to start learning, educating yourself, get a wallet, play around, whatever. I mean, it's not easy to do this, right? So I feel like on one hand, we've gone to this extreme where people are trying to regulate stuff that it's not even necessarily available to everybody yet, just because they have neither the time nor patience nor technical skills nor inclination to go there. So, I guess I'm hopeful we can find that balance.
Yeah, and we still hear the calls that the user experience, both retail and institutional, outside of the big centralized exchanges, and we can go down that conversational path as well, it's still not intuitive. It's still not easy. And until it is, there will be limits to how many people can access this or want to access this. Pardon me, Dan, you mentioned spot ETFs, and I want to open this up for the floor as well, because one of the calls from the regulator SEC about why they will not approve a spot ETF is that the marketplace and the providers looking to launch spot ETFs cannot prove that there is no market manipulation, amongst other things. Let me just ask this kind of provocative question. Is that true? And the reason I ask that is given the level of tools and traceability. I mean, we all know the forensic tools and capabilities that are out there. Lukka, you do this as well. You're able to track things. Dan, what are your perspectives on how true is that?
It's a really good question. I mean, when I think about how markets operate, and going back to our comments earlier about the fact that there's literally hundreds of exchanges in the ecosystem,
Mhm.
right?
One less now, right? With
Yeah, I mean, two became one, I guess, potentially,
Maybe.
right,
Hopefully.
as of yesterday. But when you think about the level of trading activity and the types of institutions that are already involved in the space, fast money, that are engaging in arbitrage activity across the exchanges, and there's participants in the ecosystem that exist in traditional finance that keep markets efficient, that ensure things are properly priced, and where things deviate, right? They're quickly arbed away, right? And those participants are already in the ecosystem. And I agree. Should you be including pricing from 300 exchanges and some average VWAP? No, probably not. But if you actually start to peel back some of the processes and policies in place at some of these exchanges, they do employ, in some cases, external providers of manipulation detection, wash trading, spoofing, and all of that stuff. So coupled with vetting the exchanges that are have tighter controls around their market and monitoring the market activity, coupled with arbitrageurs in the marketplace, I struggle to see how not understanding where the current price of Bitcoin, for instance, is at any point in time. So that would be my answer.
Dan, thanks so much. David, Sharon, anything you want to add to that?
No, Dan made sense. Again, it's a much more his realm, but it certainly makes sense.
Thank you, Sharon.
No, I'm all good here. Agree with Dan.
I want to go back a little bit, go back to the agenda we were prepping for over the past several weeks. We talked about some of the capabilities that exist in TradFi that are evolving in the crypto asset ecosystem. For example, I would ask, what do you see? What's the roadmap for the additional capabilities or services we expect in TradFi that global crypto markets need to do? And so we've talked about things like there's no unified price, there's no easy VWAP calculation, for example. There's certainly no best execution requirement. There's more to that as well. Does anyone have a picture of what else needs to evolve in the crypto space to make it more professionalized and institutionalized?
Yeah, I could. For me, to answer this, you think about kind of what it's going to take to kind of continue for the asset class to continue along this path of institutional adoption. And for us, the institutional adoption is already here. Like nobody would argue with that. But as we see kind of more and more institutions come, eventually over the next several years, just given its kind of risk return, volatility, and correlations, there's diversification benefits to having a percentage of a multi-asset class portfolio allocated to crypto. So coming back to kind of your question is, what is it going to take for to continue to evolve? Is I'm thinking about money flows into the asset class, and how do people start to get comfortable with allocating assets to crypto? And this is kind of our relationship a little bit more along the lines with S&P is, if I'm going to allocate in a pension fund or insurance company and I want to allocate capital to a certain asset class, what's the first thing I probably look at in a top-down approach? I'm looking at performance against the benchmark. I'm looking at potential asset managers or sub-advisors and how they're going against a benchmark, right? So the need for reliable, clean, available benchmark data that's appropriate for their portfolio, right? I think is just a first step in saying, okay, how is this asset class performing? How are my sub-advisors performing? So, that's something that we'll continue to work with S&P in creating even more types of benchmarks as the asset class continues to evolve.
Do you think institutions in the crypto space underestimate the importance of benchmarks for capital allocation?
No, I don't think they necessarily underestimate it. I just think it's more of a newer it's a newer space, and I think it comes down to education. And I think
Yeah.
people, and certainly that the experiences that we've had with our customers as they're doing due diligence on not only Lukka, but their other service providers is, what do they need to know? What are the things that they need to think through? So when they do step into the asset class, that they can be successful. So I don't necessarily think it's an underappreciation. I just think it's educational in nature and it's new, right? So
Yeah.
Go
Can
ahead,
I,
Gordon.
yeah.
Go ahead, Sharon.
Yeah. No, I mean, Dan, you gave the perfect lead in, of course. We believe, of course, at S&P Dow Jones Indices, we believe that there's certainly a strong use case for passive, right? It's not just having these benchmarks. But I think it's also when people look at the different, crypto assets that are out there, there's no set valuation methodology, right? People don't know really where to begin. They know Bitcoin and ETH, and then it's, it's not like equities again, where there's sort of like, this is how you look at it. You're going to look at, PE ratio, there's no playbook. So I think everybody's doing their own thing. So it's important also, just in addition to having that benchmark to measure the market, that we also sort of provide choice for people in a platform and give them guidance as different ways to remove certain coins, right? Like we exclude privacy coins, right? We're trying to reduce risk for people. But I would also say, back to Ron's initial question about, what else is happening in the ecosystem again, or the future of this. I think that one of the areas that we see in traditional markets is that you can have an entire ecosystem build out around indices, right? So for the S&P 500, there's S&P 500 futures, there's S&P 500 options, you've got VIX, right? People are trading these things, and the volume that's trading on the derivatives is even far higher than the amount that's trading on the spot. And I would say that when we look to the future of where digital assets are going, we want to think about creating that ecosystem around that, creating the indices that people want to trade, providing those additional measures for people, and just sort of creating the same things that we have in existing, like for the 500.
Emulate TradFi in most ways you can. David, I'm sorry, go ahead.
No, just one addition. When you were talking about institutional adoption, and again, we throw out the phrases that we're getting rid of the middlemen, but there are a lot of players that are very important to the growth of this business. I think of a conference I was at few months ago, and it was a lot of RIAs and wealth managers. And they're saying, hey, you know what, my clients are saying I ought to have X 2 to 5% allocated to this space. And they please tell me how, right? So these wealth managers, these RIAs were at these conferences trying to figure out how, because I really think it's imperative for them, for those wealth managers, to get up the curve, whether they're using tools like indices to give them some type of gauge as to how they should be invested, or maybe whether it's a broad index that might be an easy first step to get into a space, right? Or just understanding how does this sector work. But again, I think we get back to education. I think what we're finding out is we're having more and more calls with the wealth management platforms, the private banking platforms, who say, hey, we want to understand your products because we want our clients to have access to your tokenized funds or your private equity funds or your S&P index funds. We want that access, but they need to get up the curve first because their clients are counting on them often, because it's not just the individuals doing it on his or her own, right? A lot of people are still relying on their wealth management advisors.
David, that's a really good point. Thank you all. And we keep mentioning education, and in the same way, David, we've all had colleagues that say, how do I get in? How do I get involved? What does this mean? There is the other side of the coin that doesn't want to get involved or doesn't believe they need to be. And I'm being a bit more provocative about this, but I had the privilege of presenting to a small group of private equity folks managing billions upon billions of dollars, and the tone and tempo of the room was, Bitcoin is trash, blockchain's going nowhere, this is all crap, we don't believe it. So we still have a lot of work to do in the education side. David, what would you say to someone who said that, for example, in the private equity space?
Well, I would probably use the analogy of, you've got your horse and buggy and you've got your horseless carriage, right? To me, that's what the blockchain is. I would go with that. Yeah. Yes, but I would never try to sit on a pedestal and try to tell somebody how to run their business. Right. But at the same time, my view is it's coming. And I understand that if you don't see the need, if you're at a large asset manager or you're a large private equity manager, and you're happy and your clients are saying, we're fine doing it in the GP LP format, right? My suggestion, and I mean it humbly, is that you ought to at least be calling your LPs, right? And saying, hey, what do you think of tokenization, right? At least is it because because they're hearing about it. And what might happen is 2 or 3 years from now, when you go to raise your next fund and you say, hey, you're usually good for 50 million to your institutional LPs, and they come back and go, no, I'm good for 25. Turns out I've got a lot more access to these tokenized, and I found a little better liquidity, and I like that form. And you're going to get, again, are you going to get left behind? You're going to be behind the curve is kind of the idea. So my view is that even if you don't see the immediate need for it, you ought to at least be calling your clients and at least talking, rather than have them tell you 2 years later where they're teaching you about it.
Yeah, what I often say, David, is that you don't want to be the provider that says, I don't know, when a client says, I want to be involved in this and you need to do it now. Yeah. Sharon, from the perspective of S&P Dow Jones Indices, are there still clients of the firm, to the extent you can mention it, that just are not game with the whole crypto world? Or not? What kind of conversations do you have at S&P?
It's interesting. I mean, I guess the clients who aren't so interested in it, they're probably silent at this point. We're not hearing from them. I mean, they may be, very interested in all sorts of our other products. That said, I do think that if people, for us, if people don't necessarily want to go right into crypto, we also are offering equity-based indices, right? That have allow people to access, the metaverse or blockchain miners or, future of payments by people who are actually traditional companies. And I think so we see a lot of interest there too. I think there's sort of a divergence between people who are sort of ready to go into something that's fully digital, whereas other people who want to see like a real company with traditional earnings and like a real balance sheet, and that type of thing.
You don't have clients knocking on the door saying, I want you to get me into Web3 though, yet.
Not really.
Trying to define what Web3
Yeah, right.
means.
Yeah, exactly.
I want to address one of the questions that came in, which is a really interesting one. With respect to hundreds of exchanges, there are hundreds of corporate bond dealers, for example, and the prices are all over the place. And there are corporate bond ETFs. So isn't the SEC just being selectively against crypto? I think the four of us want to be very careful how we answer this.
Yeah.
And predicate that with, these are all our personal opinions. But Dan, I feel like you want to say something.
I don't know who asked the question, but they said it, not me.
I mean, it is. Go ahead. I'm sorry.
Yeah, no. Listen, when you start to trade over the counter, right? Yes, it's by the very nature of trading over the counter. You're not in an exchange. You don't have an order book. You don't have surveillance software on top of the exchange as well. So I mean, certainly there's the potential, right, for things that aren't monitored by those traditional types of safeguards, if you will, around like markets. But I mean, I think it's well known that the bond market over the X amount of years, I mean, the liquidity is something that people really pay attention to in that marketplace, right? And when you're looking at like 2 to 3% of a corporate bond, like I think according to Trace data or something, if like last time I looked, which was quite some time ago, but I mean, a bond will go a very long time without trading, and a very small percentage of that market trades on a given day. And then when you look at Bitcoin and you're seeing hundreds and hundreds of trades happening, every second, right? It's much more equity-like market than it is a credit market, for instance.
It's a very different demographic of client as well, right? You don't have a lot of daily trading retail investors in the corporate bond space. And I think SEC's perspective, if we're going to call out the regulator that's being referenced, is very much on investor protections at the retail level, which I don't think any of us disagrees with at all. No. But David, Sharon, your thoughts on that kind of question as well, if anything?
What's the question again?
The question was essentially, is the SEC beating up on the crypto industry to the exclusion of potentially other industries, for example? I know what you want to say, David, but
I don't know.
It's a controversial question.
Yeah, Dan
right?
brought up some good points. Again, there's a lot of markets that have more and then have less liquidity. Again, I think transparency and pricing transparency. Again, to me, there's nothing like seeing an actual trade happen to be able to market. So again, I think that's what transparency brings to the table. But I'll leave it to the greater minds for comments.
Yeah, I'm with you, David. But and certainly I think everybody knows there's even a lot of improvement that can happen in the bond market too, right? About different ways of using technology. So maybe we'll see some advances there as well.
one more question. Thank you all. One more question we've got here, and then we'll wrap with some closing comments. Illiquidity of hedge funds and private equity is intentional and or related to the inability to price underlying assets midterm. How does putting the hedge fund or a private equity investment on the blockchain address this? It's a very long question. It goes beyond that. Let me stop there for a minute. That's a really good question, because I think that goes back to the education aspect of it. How does blockchain capability and tokenization and the tools that S&P and Lukka and Securitize are all creating, how does that make any of that better? What is it really doing for that space? If that's what they want, is that lack of clarity or that lack of transparency?
Well, it's interesting. I've heard this question before, where people say, "Hey, some of this stuff might not rather." Well, the short answer is it's coming. And if something's going to trade, you're going to see it trade. I mean, just because it doesn't trade doesn't mean its price hasn't moved unnecessarily. And I think you're going to see, once you see more trading and more transparency, I think for most, that's generally good for the market. I think that'll increase participation, right? Again, when you take some of the opacity away from, for some of these instruments.
David, isn't it also I don't want to step away from the crypto aspect particularly, but leveraging blockchain technology optimizes how GP and LP interactions happen, for example, we could talk about as well. There is the technology back end of leveraging blockchain in the space, correct?
There's a lot of technology behind our firm's mostly technology folk. And that's, I think, one of the reasons we're successful is that we were built by technology people, and then we brought the finance pieces of it together. So short answer, absolutely.
There is one more question, pardon me, one more part of this question regarding immediate settlement. I think it's really worth noting. They say often NAV isn't available for days or weeks. Another few hours for banking settlement doesn't really matter. I'll push back a little bit on that, because if we're talking about a crypto-based or blockchain-based world, it won't take days or weeks to get NAV. What are your thoughts? Does anyone want to answer that kind of pushback on why it doesn't make sense to get involved in crypto and blockchain? Does it get any better with crypto or blockchain, I guess is the question. Or how do we answer that attendee's question about whether or not, who cares about instant settlement when you can't get NAV in a timely manner? Are we wrong to argue that you can get NAV in a timely manner in a crypto world? In a crypto fund, for example?
I mean, Dan, you should chime in here too, but I think, we can get NAV, right? And I think Lukka's products are behind striking NAV, right. Sort of on a regular basis.
I was trying to softball that for you, Dan.
I'm passing it over.
Yeah, I was trying to understand the question as is being asked, but I think I understand now. What's going to answer is it depends on the underlying nature of what's been tokenized. So yeah, I mean, to the extent cryptocurrencies, and we provide data from anywhere from once a day to hourly to minute by minute to even sub-second, right? So the ability to know exactly where a given crypto asset is being priced, particularly if it's liquid, it's immediate. And again, it just goes back to kind of much more technologically kind of forward-thinking people that are coming into the space, and as it evolves, it's people will look back at kind of like historically how we've done things as just an industry in general, and they'll probably ask why, because they'll see, like you meant, much younger generation coming in that are much more kind of tech savvy. Like this will just be the norm for them, right?
Dan, thanks so much. We've only got about a minute and a half left. Sharon, let's start with you. Kind of closing comments. What's next for S&P Global Dow Jones Indices, and how can people learn more about the work you and your team are doing?
You know, we continue to see what's happening in the space and try to stay involved as best we can in terms of what's sort of regulated and reduces risk for our firm. But certainly on our website, we've got a load of stuff about our indices. You know, we have a load of blogs and education, and people can always feel free to reach out to me.
Sharon, thanks so much. Mr. Hogan, what's next for Securitize Capital? What are you looking at? Where can people learn more?
Oh, I'd always use this, the phrase of watch this space. Same idea. If you look at our website, I think we have a nice array of products already. So we have alpha products, beta products. We have products that provide access in what we believe is a very efficient way. And we also have learning and education on the website too. So we're going to continue to grow. We're trying to assess what the market is looking for. We're not just making things in a vacuum. It's a lot of collaboration with the issuers. What's the best next piece to tokenize? So we're just going to continue growing the market.
David, thanks so much. Dan, last comments from you. What's next for Lukka? What's in the future? Where can people find out more?
Yeah, and it's a good question. I mean, just things change so quickly that it's hard to have a roadmap like beyond like several weeks because things
The latest news cycle.
But generally speaking, yeah, I mean, we have a joke. It's we things that we think we're 2 years out, then we see it like 2 weeks later, like a request from customers. So it's really exciting place to work. But generally speaking, to answer the question, we've done a lot of work around normalizing, cleaning, and making sense of a messy ecosystem. So we've normalized the data, so we have a really good foundation. What you'll see next is more derived type products from Lukka that are geared towards risk management. Now that we have the underlying data and everything's normalized, and we'll start to create more derived products. We've recently launched vol surfaces and applied interest rates, and we'll push more into the valuations and risk space.
Dan, David, Sharon, thank you so much. Always a privilege. There's so much happening in this space. We'll have to have our follow-on about latest exchange consolidations. That'll keep us occupied for a little while. We'll also share with the attendees links to your websites as well. But again, such a privilege. Thank you for your thought leadership. We'll leave it there, and we'll chat again soon. Thank you so much.
Thank you very much.
Take care, everyone.
Thank you so much.
Thank you.
Bye-bye.